Hi all, Joshua Steger here from ETFadviser.com.au. Today I'll do my usual weekly rundown of the Aussie ETF market and what investors should be looking at for the week ahead. I'm going to touch on three topics this week. Number one, I'm going to take a close look at the US market. We had been expecting a correction. There's a few things happening over there and some key levels to watch. Number two, I'm going to look closely at the Asian markets. I'm going to look at China, Hong Kong and Japan and just see how those markets are faring up and where the opportunities may lie. And number three, I'm going to touch on commodities and why I think that's a really important space for investors to be focused on and what the opportunities are there as well. So they're the three topics I'm going to cover today. So let's have a look at what we spoke about to investors last week. So the weekly emails out to subscribers today, just this afternoon, and we'll just, as part of that, every week we look at the key ideas that we had last week. So we had food, cure, Japan, and atom as an ad, and then we're still looking at uranium in Asia as ideas watching for improvement. So food is still setting up, but it's near the 2-year highs. Cure into new 5-month highs. Japan, that's a really interesting one that we'll touch on in that section too. But that's looking really interesting here as well. And then atom, that's a really key theme going forward, and that's near all-time highs, and I think a really important space to get exposure to, just in terms of energy and obviously the energy needs of AI going forward. So let's take a look at the charts now. We'll start, so this is topic one, we'll start taking a closer look at the US market. So we'll start with the volatility index. This is the VIX, and you can see we've had a few kind of spikes, but they've recovered pretty quickly after. So you can still see on the weekly chart we're pretty much in this downtrend. So suggesting there's not a lot of volatility around, but typically around that September October period. So let's look last year, maybe even draw that back and see so this is 2023. You can see that September and October period is usually a period where there is high volatility. So we might even draw that back on a monthly chart, and you can kind of get a feel for when that's coming in. So might just extend that out. So we kind of imagine that September, October will be, those last couple bars in the year, and you can kind of see pretty much every year it's kind of been spiking up around that period. So that's something to keep in mind, and thus far it's been a really pretty much a low volatility market since the tariff correction. Things have pretty much gone straight up. So you can see that on the weekly chart. There's your tariff correction, and then the VIX has just come right off. So at the moment, we've had, as I said, we've had those couple of spikes, but in general the market's pretty complacent. I don't see a lot of volatility around at the moment. So let's have a look at the S&P 500 index, and you can see a key kind of level that we're watching is that 20-day moving average. So that 20-day moving average is in purple, and you can see sold down one day, then it's recovered. Sold down one day, recovered. We had that again this week, sold down and then quickly recovered. So pretty much through the whole rally from the tariff correction, it's been supported at the 20-day. It's only been under kind of 1 day, not even a full day, and then that was a day where it opened, sold down, and then pretty much back above. So if we do start to get 2 days under that 20-day moving average, there's a big change of character and something to be cautious of. Perhaps for a bigger pullback, which is kind of what we're expecting, or at least more volatility, and that would set us up for a hopefully a positive finish into the end of the year. But thus far, that's probably looking relatively constructive for the S&P. Where the weakness has been is in the NASDAQ, and you can kind of see just these red bars really starting to pick up. So there's definitely some selling around in the NASDAQ, and you can kind of see that basically distribution, institutional distribution kind of creeping up. And you can see, as opposed to the S&P 500, which has held that 20-day, the NASDAQ has got under the 20-day, and now it's kind of testing that 50-day, and the 50-day is now up really quite close to where the market is. So if we do start to spend, any kind of day or 2 or 3 days under the 50-day, that's a big change of character and something to be quite cautious of. And that would probably indicate that we're in a bit of a correction, and you might see something like this just through, well, probably, let's draw that out. So we're probably kind of expecting volatility second half of September. We might just chop around here. Maybe we get a little bit of correction into October, November, and then that would set us up for a better finish to the year. So we'll see how things play out. But the key index to watch at the moment is the small caps, and that's finally getting a bit of flow. And there's kind of those indications of interest rate cuts. That was a big day. Follow-on buying. There was that kind of day where the S&P and Nasdaq sold off, and then you've pretty much had back-to-back buying to finish the week in the US on the small caps. So still, investors still hopeful that rate cuts are coming, and that will stimulate the more interest rate sensitive parts of the economy, which would be the small caps in the US, which, there's the kind of previous high. So that's kind of around, say, let's just actually get the actual figure. So that's around 245 is kind of the previous high just on the IWM, which is the ETF in the US. So I kind of imagine over the next two weeks that we're kind of going to get to that previous high, and that's where your resistance is going to come in, and then that might give us that little bit of sell-off and hopefully line up to a strong finish at the end of the year. So that's what I'm thinking at the moment, that we're going to get probably a bit more positive movement in the small caps in the US. Well, there's a potential for it until we kind of hit weekly resistance. So that's something to keep in mind, and that's kind of what we're watching. So we've got kind of key levels on the S&P. We've got the 20-day moving average where we're looking for kind of 2 days under there. That would be a big change of character. Nasdaq 2 days, if we get 2 days under that 50-day, that's a big change of character. And then we'll just be watching to see when the resistance comes in for the IWM. And the IWM, so the small caps can be quite volatile, and they go to, this is pretty strong move now straight off the bottom, and you've pretty much had 1, 2, 3, 4, 5 weeks of buying. So it's pretty much, a bit over a month of back-to-back buying. So that's pretty strong. And even if you look back in history on the weekly chart, you're not getting, well, even in recent history, probably not getting a whole lot more than 5. There's 1, 2, 3, 4, 5, 6, 7, 1, 2, 3, 4, 1, 2, 3, 4. So you're not really getting, up 5, 6 weeks up of buying is probably getting to that level where you would be expecting a correction, and that would coincide with that weekly resistance. So maybe we've got another week or two for the small caps to potentially run, and then, would be healthy to get a correction. So that's kind of my thoughts at the moment. And but as long as the small caps are holding up and the S&P 500 and the Nasdaq are above those moving averages, the bulls are still in charge, and things are kind of just creeping higher, which is positive for investors. So let's touch on now. We'll just quickly just have a quick mention of the euro. So this is the Euro Stocks 50 index, and you can see now, this wasn't doing a whole lot for quite a long time now. It was in this kind of consolidation, in this kind of base, but just this week it's now crept under. It's gone under those moving averages. So now you've got the moving averages, the shorter term moving averages, the 6-day, the 10-day, and the 20-day trending down, and now you've got kind of a ceiling there with the 50 days is serving as resistance on the upper end. So that's something to keep in mind and see how the euro, kind of goes from here. Will it get back above that moving average? And that would obviously be positive, or does it start to sell down? That's something to also keep a close eye on. But obviously the bigger market's the US, and so that's going to be interesting to see how that plays out. Now let's talk about Asia, and it's actually looking really quite positive, and I'm thinking perhaps the US market will top out in the next week or so, and it looks like there's a chance that money will rotate into Asia. So let's just look at the reasoning for that. So we're just looking at the Hang Seng here, and you can kind of see again this week there's pretty much a seller up around this kind of let's just have a look at exactly what it is. 25,750, 25,850, even almost got to 26,000 there, but pretty much around that 26,000 level. Just hasn't been able to get through, but it's tried, failed, tried, failed, tried, failed. But as you can see, it's kind of almost like tightening up every time, and that's pretty much happens there. There's a kind of psychological level where there's clearly a seller there. So when it's, got up to there, it's sold off, got up to there, sold off, got up to there, sold off. But each time, this market's kind of building more and more energy for that potential move through 26,000. So just looking at it there, just to the eye alone, you feel like it kind of might just need that extra week or two, even if not longer, to build that energy. And maybe that will coincide with the top in the US market, and we'll start to get some rotation into into Asia. So that's something that I'm just keeping an eye on at the moment. How's this going to play out? What's the play there? But we're certainly looking for this market to get through that 26,000. If we have a look on the weekly chart as well, you kind of get a feel where that resistance has kind of come in on the weekly chart as well. So it's kind of going back to this point here, and that's just seems like it wants to spend that time there, let these moving averages catch up, and just start to chop through there, consolidate, tighten for that next move through. So it kind of makes sense, and we'll just see how that plays out. But perhaps it'll line up with a top in the US and a rotation into Asia. So let's have a look also at Japan. So it's been really interesting, one that we kind of missed in terms of that strength, because it was almost in like a European style. That's more the weekly there, but if we zoom out on the daily, it was kind of in this almost like it wasn't doing a whole lot. So obviously you got the tariff correction. It felt like almost in this period it was in like a European style, just chopping backwards and forwards. But then we've had a big day sell off, big day, another big couple of days, and we're really expecting, and this was a key idea last week as well for subscribers, we're expecting a bit of a pullback buy opportunity here. And where did support come in? It was around that 20-day moving average. So you can see for that kind of move, obviously it's into highs, and then it's just kind of unwound. There's been a bit of selling there, but then the buying came in exactly the right point. So that's where you look to start to buy, and obviously that's a textbook kind of pullback buy there. So interesting that has worked so far. And in terms of a pullback buy as well, we had some weakness in China. Obviously China has had a really big move out of this as well. So out of this kind of consolidation pattern, and been in there a while, pretty much October. So coming up to 11 months of pretty much sitting in a consolidation, and then it's just finally started to move out. So this is a quite constructive point. And then you kind of got the buying, back-to-back buying. You can see that good high volume buying, pushing it out into kind of 11-month highs, 10-month highs, then found some resistance. So obviously that's a pretty significant move for a big index. So let's just measure that, say, from the breakout point. So there's a kind of 8% in kind of 20 days. That's pretty significant for a major country index. And then obviously it just needs to consolidate from that point. And that's exactly what's happened. Last week we were talking about that it held the 10-day, and then just needed more time. It's held the 20-day this week, found support, and we'll see how that kind of plays out this week as well. In terms of the next point of resistance, it's up around these levels where we've had some prior resistance, and that was after the stimulus announcement in China. So yeah, there's certainly an avenue for that to move out. So if we measure from there, it could be 10%, 5 or 10%. It could move before it found another point of resistance. So we'll just see how this kind of plays out, but it is looking really interesting. So you've got to line that up with Hong Kong, which feels like it needs a little bit more time. You've got Japan, which just set that pullback buy, and now we've got China looking like, it's held that 20-day Maybe it'll take a little bit more time and then try and have another run. And as I said, it could go 5 or 10% up to these kind of previous points of resistance. So once again, it feels like Asia's kind of a week or 2 or 3 weeks away from proving itself, having China move into highs, Japan move into highs, and Hong Kong move into recent highs as well. So for Hong Kong to move out of here, that'll be pretty much a 4 month. Coming up to a very close to a 3 or 4 year high. So that's pretty significant. And at that point, it could well run. So just have a look on the weekly chart. That once it gets through this resistance, it could well run. Points of next resistance could be back into these highs. I mean, that's 20%, 20 odd percent, 25%. Even into that point of resistance 5. So it's almost like in those increments 5, 15, 20% kind of move before it kind of hits that weekly resistance. So it's pretty significant, and that's something I'm watching really closely. So it feels like Asia a couple of weeks away, and it feels like the US is at that close to a topping point in a couple of weeks as well. So in terms of volatility as well, we'll see how that plays out, how that rectifies. It's going to be really interesting. And then I just want to cover off on commodities. So obviously commodities have been a really big mover, and that's good for our market. And the big mover, the leader has been obviously gold. So that's been a big mover this year after a long period where it didn't do a whole lot. And pretty much, since the start of 2025, it's just kind of gone straight up. So let's have a look at some of the data here, just showing that gold, it can tend to lead the commodities move. So in terms of, you've got commodities ex gold in black, and then you've got commodities ex gold versus gold. So it's just showing, obviously gold's had a really big move, but commodities haven't really followed, and commodities are kind of at a point. Certainly cheaper than they were in the GFC, not down to levels of COVID, but certainly looking very undervalued versus gold. So there's potential for a big catch up to occur here. I mean, you're almost looking at, that's a pretty significant move to get up to more normal levels just in terms of history. So we'll see how that plays out, but certainly gold has been the big winner. And now we've started to see, resources. So I like to look at the Van Eyck Australian Resources ETF MVR, and you can kind of see, it was just in absolute no man's land. Even in after the tariff correction, it's kind of at new lows. Then all of a sudden, it's come out of this initial base, and already that's a pretty significant move, and it's starting to rank now. So that's 10% out of that base. From the lows, it's 37%. So it's really starting to rank as one of the top performing spaces or themes and sectors in the last couple of months, just in terms of this move. From there, I mean, it's even in the last two or so months, it's like a 20% move. So it's really quite significant. But keep in mind now that it's coming up against that resistance, and it's pretty much been a move straight off the bottom. So would expect, something like that to kind of coincide with what we're seeing in the US as well, where it's coming up to resistance, and we might get a bit of consolidation just to position or give it, profit. People want to take some profits, and why not? It's had a really big move. And then that gives us an opportunity to re-enter or add to positions. So, it feels like it would kind of coincide with that October, November bottoming. So that's kind of what I'm thinking commodities, but there's still opportunities. So we've had, say, gold and precious metals run. We've had, critical minerals start to run as well. So if we consider something like, lithium starting to come back, but also had a lot of these rare earths stocks have been big performers. Obviously, the big mover in the US, and this is kind of what started it all as well, was MP Materials, and you can kind of see that's had a pretty significant move. Just from July, it's even up still 100%. pretty much out of nowhere. So that's the rare earth. So that's kind of the critical minerals. So for example, you had gold and precious metals run, critical minerals run. Finally, we've been talking about that for quite some time as well. Copper stocks start to run as well. So here you've got the global copper miners. So that's started to join the party and up near previous highs as well. Exactly the point where resistance would start to come in on the weekly chart, and you need a bit of back and fill to set up for the next move. So these feel like they've kind of had their run, or getting to a point where they're extended. But now, what will follow after commodities? You've got the hard commodities. You also got soft commodities. So that's one thing we're looking at as well. So as an example, in Australia, we've got food. So this is BetaShares Global Agriculture Companies. And it's basically the same themes. They're dropping rates. People worried about the value of the dollar. There's still some inflation around. Obviously, it goes into hard commodities, gold first, copper, critical minerals. Will it now start to flow into soft commodities as well? So that's something to keep in mind. We've actually got quite a nice structure here set up as well, and it feels like it's already started. It's come up against that weekly resistance. It's already started to chop. So say the last month or so, it's kind of been chopping around, trying to get through, build that energy to get through into new highs, or certainly kind of new 52-week highs. So that's something to keep in mind. That's what we're watching, and this is one of our key ideas this week. Commodities, I'm still very optimistic with commodities. I think they're incredibly cheap, and there's real potential for upside. If we look on the monthly chart for food as well, you can see it's still at $7.20, and in COVID, say, it got to $9. So there's your kind of base. There's real potential for this to move out and even into new all-time highs as well. So I think we've got a lot of upside in the commodity space, which is pretty much very good for the Aussie market. And but we'll just touch on, that respect as well, we'll just have a look at the Small Ordinaries Index, which is starting to rank now as the top performing index in Australia. And this is in the small caps, and you can kind of see it's had a really strong move now from the tariff lows. So, and now we're pretty much getting up into an extended point as well. That's pretty much the base, and we're now 1, 2, 3, 4, 5 weeks of a pretty strong move. And you can kind of see, say this is the base here. You've had kind of 1 touch, 2 touch, 3 touches, the moving average. You're really starting to run out of time. And that's where you kind of need to build a new base as well. And you've got to remember that a large portion, or a reason why the small caps are running, small ords in Australia are running, is because of that resource space as well. So it feels like some of those probably need a bit of rest. But once again, I think that'll be setting us up for the next big opportunity. But soft commodities look like they're probably in that space. They're at a point where they've already kind of tried to get out into the highs, and then spent like 1, 2, 3, 4, 5, 6 weeks now just kind of chopping. Will it be another couple of weeks, or will they be able to start moving out? That's something to keep in mind. But in general, I'm really optimistic. Once again, looking back at this chart, the potential gold commodities versus gold are very cheap, cheaper than the GFC, but not as cheap as a COVID correction. But pretty much, just look at that. Gold has certainly been leading that commodities move. If the same economic reasons for investors to be buying gold flow over into all the other hard commodities and soft commodities, there could be a lot of upside. And in terms of that backdrop as well, nothing's changing. The government's still printing money, inflation still exists, and people are obviously worried about the value of their money. They want to put in hard assets, but also there's underlying demand for all these soft commodities and hard commodities, just in terms of what's happening economically and the growth drivers, energy and whatnot going forward. So something to keep in mind. So I won't go much further, pretty much already run it over time, but that's just a quick summary. We're looking at the US market, obviously spoken about those key levels to watch, and it feels like maybe. We'll get a bit of a decision in the next couple of weeks, but it feels like the small caps could run a little bit more here, and then we'll see what happens. We'll see what happens in the Eurozone, how this plays out. Does it get back above these moving averages or not? That's something to keep in mind. And then also got to remember, the Eurozone was a really strong mover straight out of that tariff correction, so it feels like it's maybe a little bit of ahead in terms of giving us a bit of a prediction as to what may happen, say in the US markets. And then also Asia looking really quite constructive, so we've got that seller still around in Hong Kong, see how that plays out. China, Japan, all looking really constructive, getting supported at those right levels. So as I said, certainly setting up. Will it take another week or will it take another few weeks? But they look like they really want to move into all-time highs or near-term highs. And then commodities. I think there's a really big upside there for commodities. They're playing out right, and now it's just a matter of kind of what's the next sector within that commodity space. And I think soft commodities are going to be a key idea going forward. So until next week, thanks for your time.